Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar might not look like much. However, the inflation data being released out of the Eurozone at 12 o'clock South African Standard Time could create some excitement within the market and create some fantastic trading opportunities. Additionally, the unemployment claims report coming out of the USA at 3:30 South African Time could also create some fantastic pre-trading opportunities in the US session.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar fell across the board yesterday, weighed down by firmer commodity currencies that benefited from China's strong manufacturing activity data, as well as gains in the euro after German inflation soared last month and raised rate hike expectations in the Eurozone. Along with the Australian and New Zealand dollar, the Chinese yuan rose after data showed Chinese manufacturing activity expanded at its fastest pace in a decade, smashing expectations. The official Manufacturing Purchasing Managers Index, or PMI, shot up to 52.6 last month from a 50.1 in January. Now having a look at our analysis on USD CHF. Should we get a nice close above our primary resistance level at 0.942, we could see this specific asset rallying all the way to our next primary resistance level at 0.953. Now let's move over and see what's making headlines on Wall Street. The S&P 500 and Nasdaq fell for a second straight session yesterday, as Treasury yields jumped after manufacturing data indicated inflation is likely to remain stubbornly high, while comments from the Federal Reserve policymakers supported a hawkish policy stance. The yield on 10-year notes topped 4% for the first time since November, reaching a high of 4.01%, after the ISM survey showed US manufacturing contracted in February and prices for raw materials increased last month. Having a look at our analysis on Nasdaq, we can see here that we have broken through our primary support level at 11,900. Should we remain below this level, we could see this asset selling further all the way to our next primary support level at 11,600. Now let's move over to commodities. Record high US crude exports helped offset the market's anxiety over another weekly build in stockpiles, sending oil prices higher for a second day in a row. WTI crude settled at $77.69 a barrel, up 64 cents or 0.8%. Looking at our analysis for US crude, we can see here that we failed to break that primary support level at $76.5 a barrel, and we are now hovering above our primary support area. Should we stay here, we could see this pair rally to our next primary resistance level at $82 a barrel. Gold prices rose for the third consecutive session from their weakest level this year, as a February rally in the dollar appeared to have run out of steam. As the dollar index fell yesterday, also hit by some profit taking after rallying nearly 3% in the past month. Looking at our analysis on gold, we can see that we are currently just above that smaller support level, as well as our EMAs are turning slightly more bullish. Should we stay above this level and close around that 1839 level, we could see this specific pair rally all the way back to our next primary resistance level at 1860.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.